Are online banks really safe? And if yes, what are the top 5 online banks in the US right now? Hello, Diamond NestEgg members, super savers, and course fans. I hope you're healthy and well. So, when we think about brokerages, names that spontaneously come to mind include Vanguard, Interactive Brokers, and Robinhood. And while these companies operate in different segments of the market, what they have in common is that they are online brokers or direct brokers, meaning they do not have any retail branches where you can just walk in and tend to your investment business. Not having any branches shaves some costs off of their P&L, their profit and loss statement. And Vanguard especially has made its name and built its current size by using the advantage to lower fees for the investors. In fact, probably less than 10% of retail brokerage customers still have accounts with traditional, branch-focused wirehouses like Morgan Stanley or Merrill Lynch. Wirehouse is just another fancy word in the industry for a large, full-service brokerage, by the way. For banks, though, it's basically the opposite. 90% of accounts and deposits in the U.S. are still with traditional institutions that have branches. Branches can be expensive to run, and banks need to pass these costs on to their customers. In contrast, branchless online banks are leaner and can offer more competitive rates to their clients, just like their online brokerage counterparts can. And yet, institutions with branches still dominate U.S. retail banking, as I just said. So why aren't more people switching their accounts to online banks, even though they may be earning too little on their savings or paying too much in fees and loan rates as a consequence? Well, that's what we're here to figure out. Here are the 3 topics that we'll be covering today. 1. What are the disadvantages and advantages of online banks? 2. What should you be really careful of with online banks to keep your money safe? And 3. Who are the top 5 players if you're thinking of switching to an online bank? And because I know this question or comment will come up, please note that when we speak about online banks today, we're talking about what we in the industry actually refer to as branchless direct banks, such as Marcus by Goldman Sachs and Ally, not banks like JP Chase, Bank of America, or Citibank, which have physical branch locations, as well as online capabilities. Let's dive in now, folks. What are the disadvantages and advantages of online banks? As I mentioned in the beginning, Vanguard is a completely branchless investment firm, and the other 2 big brokerages that our Diamond NestEgg regulars use, Fidelity and Schwab, only have a few hundred branches in the entire US combined. Together with other branchless newcomers, this represents about 90% of the US brokerage market. In contrast, the firms that dominate banking in the US still have thousands of branches. JP Chase has about 5,000 branches all over the country. But even regional banks like PNC Bank or US Bank still have more than 2,000 branch locations each. And the credit unions maintain an additional 19,000 branches on top. The largest online bank, again meaning one without any physical branch locations, is Ally Bank. Ally only comes in at 24th place in the ranking of U.S. banks, with $151 billion in deposits. In total, all the online banks combined have far less than 10% of deposits in the U.S., which is smaller than JP Chase's share of almost 12%, which of course begs the question. If branchless online banks, with their slimmer cost structure, have the potential to offer better rates and conditions to savers and borrowers, why aren't more customers moving away from their branches? Similar to how they move their investments from traditional brokerages with physical branch locations to branchless online brokerages. So let's take a look at the 3 key disadvantages of banking with an online bank. First, no in-person service, ever. In banking, there are still some transactions where you simply need a physical presence. If you want to withdraw or deposit cash, you need at least an ATM. Only a physical location can offer safe deposit boxes. Many bank branches also offer notarization services if you need a signature verified on paper. And strictly speaking, Even if you could do something online, it's sometimes just nice to be able to talk to a real person, face to face, in a branch. This may be particularly true if something goes wrong, but also if you need advice on more complex banking products, such as mortgages, second mortgages, or more advanced saving strategies. I know that some of our Diamond NestEgg regulars, for example, love visiting their bank branches. The second disadvantage, and maybe the most important, may be a lack of trust and long-standing reputation. Not many online banks are household names and are widely known across the financial community in the same way that Vanguard is for the brokerage community, for example. I'd even go as far as to say that no name on the list of online banks that I'll be sharing with you later has the same ring as a JP Morgan Chase, Bank of America, or Citibank. And while some people are willing to test out a relatively unknown online bank for a single product, such as a high-yield savings account or a low-cost car loan, most Americans seem to be very reluctant to move their main banking relationship for their checking account. It takes a bit of a leap of faith to trust your paycheck together with all your other daily money needs to a branchless newcomer where you have never met anyone face to face and don't even know where they sit, which leads us to the third disadvantage: limited product offering and breadth of services relative to traditional banks with branches. This stems from the fact that many early online banks in the US had their initial breakthrough as specialist providers with maybe one or two narrow products. This specialization and their smaller size means that it generally takes online banks longer to build out a full product offering like the type offered by more traditional established banks with physical branch locations, which may in turn make people more reluctant to switch. A bit of a vicious cycle, you could say. Of course, there are advantages to online banks as well. Otherwise, we wouldn't be here talking about them today. Here are the 3 key advantages that customers can gain by switching to an online bank. First, better rates for savings. Those of you in our community who have been watching our videos on the deposit accounts that pay the highest interest rates will be familiar with some of the online banks that we'll be covering later on. High-yield savings accounts for online banks are often in the top 10 or even top 5 in our rankings table for rates. And some online banks pay attractive rates even on their checking accounts. The reason they can offer these higher rates, their cost advantages from not having branches, also explains the second advantage of online banks: low or no fees for many banking products and potentially lower rates for loans. And speaking about fees, some online banks also try to overcome their disadvantage from not having their own cash machines by reimbursing their customers for all fees when they withdraw cash at a third-party ATM. That said, this is not universal, so make sure you check the conditions for any online bank that you might be interested in. And third, speed and convenience. With an online bank, you can do everything on your app or over the phone, whenever you want, wherever you want, and you don't ever have to go into a branch during opening hours. Now, many traditional banks offer their own websites and apps as well by now, so it's not like day and night anymore. But the websites and apps of online banks can be cleaner and easier to use, and many even have a certain coolness factor that more conventional banks sometimes lack, if that's something you care about. Do keep in mind that for the FDIC, the Federal Deposit Insurance Corporation, it doesn't matter whether a bank has branches or not. As long as your bank is a member of the FDIC, your deposits are insured up to the standard limit of $250,000 per depositor per insured bank for each account ownership category. This is the case for the online banks that we'll be discussing today. They all have their own bank charter, are members of the FDIC, and benefit from deposit insurance exactly the same way as any other bank, branches or not. There is, however, one nuance in the market that you may have heard about and that you should understand before you choose an online bank. And on that note, let's move on now to the next part of today's discussion. What should you be really careful of with online banks to keep your money safe? So, some online companies appear and behave like an online bank, but are really only fintechs, financial technology companies in the eyes of the FDIC, and not banks whose deposits would be insured. Let's take the largest of these exceptional cases, Chime, and let's use it as an example for how their model works. When you go on the Chime app or call them, you're communicating with Chime, and their systems and staff will deal with your request. But as soon as you or someone else wants to send money to your account, you will get the routing number and account number for one of Chime's two partner banks, the Bancorp Bank in Wilmington, Delaware, and Stride Bank in Enid, Oklahoma. This means any money you deposit or receive will not actually sit with Chime, but in an account with Bancorp Bank or Stride Bank, which are both fully chartered and FDIC insured. In that way, if Chime were to go bankrupt, it wouldn't really impact your money. Your money should still be sitting safely with one of the partner banks, and Chime couldn't touch it. And if one of the partner banks was to go bankrupt itself, the FDIC would step in and make you whole up to the standard FDIC threshold of $250,000 per depositor per insured bank for each account ownership category. Some depositors may even appreciate this construct where their money is sitting with someone like Stride Bank, which has been around since 1913. And by the way, this model of using partner banks isn't that new. Brokerages have been successfully sweeping unused cash into chartered and insured banks for decades. That said, there is one main risk that has emerged in the recent past if a fintech uses a partner bank for deposit insurance, as in the Chime example. The coordination between the fintech and the bank that actually has your money. While the partner bank is safeguarding your money, Chime is supposed to keep track of all your incoming and outgoing transactions and resulting balances. So if they were to suddenly go bankrupt, the money will still be with the partner banks, but there may be some confusion about the exact latest numbers and or pending transactions in your account. In fact, when Synapsa, a middleware company that connected fintechs to their partner banks, suddenly collapsed in 2024, it didn't go as smoothly as everyone had hoped. First, with Synapsa gone, some folks couldn't get access to their accounts. Remember, you as the ultimate customer don't have direct access to the partner banks. And in the case of Synapsa, some discrepancies emerged between the books of some fintechs and their partner banks. It was a bit of a mess, as some Yada customers can attest to. Now, to make sure it works more smoothly the next time something happens, the FDIC has tightened the rules about record keeping for fintechs as a consequence of the Synapsa case to make sure it's always clear who has how much money and where, and that the rightful owner can access his or her funds when they want to. Nonetheless, some residual risk may still be there. So, to be crystal clear once more, all the online banks that we're discussing today have their own charter and are members of the FDIC. So the partnership model that Chime has that we just talked about and its risks are not really relevant for them. But it is something to remember if you want to cast your net a bit wider when researching and comparing the market. Right. Now that you know the difference between a proper online bank that is a member of the FDIC versus a fintech that simply looks and behaves like a bank, and you know the three key advantages and disadvantages of online banks, let's move on to the next part of today's discussion. Who are the top 5 players if you're thinking of switching to an online bank? As I touched upon earlier, some in our Diamond NestEgg community use online banks selectively and opportunistically for certain products, like high-yield savings accounts, for example, when they see an attractive rate in one of our videos, but will still keep their main account with a more traditional, established bank that has physical branch locations. Few retail customers go all in and move their primary banking relationship and checking account to an online bank, as I said before. So if that's something you might consider but are not quite sure about yet, let's take a look at our top 5 online banks and credit unions that might be contenders for your primary banking relationship. All of them offer you a foundational checking account, but also a more complete set of products and services that should meet most of your everyday banking needs. In this column, we have the name of the online bank or credit union. These next columns show where the bank or credit union is headquartered, when it was founded and or got its banking charter, and its total assets at the time of this taping. This next column gives you a summary of the online financial institution's signature products. This should provide you with a good first feeling for what each online bank or credit union can offer. But of course, if there is a specific online one that you like, do visit their website for a complete overview of their product offerings. This second to last column explains the institution's policy for ATM fee rebates or reimbursements. After all, you don't want to pay extra if you need to access your cash. And this last product gaps column points out some of the products and services that are not offered by the online bank or credit union. We've prioritized this list based on total assets, starting with the online bank that has the highest amount of total assets, Ally Bank, which has its headquarters in Sandy, Utah, and was founded in 2009. It has total assets of $180 billion, which is significantly more than the second contender on our list, but still less than 5% of JP Morgan Chase's total assets. As I said before, online banks still have a lot of room for growth. Ally Bank's parent company is Ally Financial, which traces its roots back to 1919 and keeps its group offices in Detroit, which is a legacy of its beginnings as GMAC, the General Motors Acceptance Corporation. GMAC was founded to finance GM cars, and given this pedigree, it's not surprising that auto financing remains one of Ally Bank's strengths. But it has built a solid product offering over time, including checking and savings accounts, as well as investing and retirement solutions. And you can get fee-free cash withdrawals from worldwide all-point or MoneyPass ATM networks. Except for auto loans, Ally has only limited lending products, though. It recently sold its credit card portfolio to Merrick Bank, which is also based in Utah and not that far from Ally Bank's headquarters. Up next is SoFi Bank, whose parent company is SoFi Technologies. SoFi Bank got its start as an affiliate of the initial SoFi brokerage and investment business, is headquartered in San Francisco, California, and received its bank charter in 2022, more than a decade after SoFi itself was established in 2011. SoFi Bank has total assets of $41 billion, so smaller than Ally Bank at total assets of $180 billion by a wide margin, as I mentioned earlier. In our mind, though, SoFi Bank probably has the most complete product offering of all the online banks and credit unions on our list. SoFi Bank offers savings and checking accounts, as well as credit cards, loans, and mortgages. It also offers investing and retirement solutions, including crypto. There are also special benefits and experiences for members, probably some of SoFi Bank's special strengths. And you can get fee-free cash withdrawals from worldwide all-point ATM networks. In terms of product gaps, SoFi Bank has a limited offering for auto loans, and there's no easy way to deposit cash without a fee. Next on our top 5 list is Axos Bank, whose parent company is Axos Financial in Las Vegas, Nevada. Axos Bank itself is headquartered in San Diego, California, was founded in 2000 as Bank of Internet USA, and has total assets of $26 billion. Axos Bank's product offering is in a way comparable to Ally Bank's. Axos offers checking and savings accounts, as well as premier banking services and personal, home, and auto loans. Some of you may be familiar with Axos Bank, as it has come up often in our videos on top high-yield savings accounts. Another strength is that Axos Bank offers unlimited domestic ATM rebates on some of its accounts, which takes away the worries about withdrawing cash when you're out of network. In terms of product gaps, Axos Bank has limited investing solutions and does not offer any student loans. After Axos Bank, we have Alliant Credit Union, based in Chicago, Illinois. Alliant is the one credit union on our list, which means it's insured by the NCUA, the National Credit Union Administration, but the limits and conditions are pretty much the same as for the FDIC. Alliant was founded in 1935, and you can probably deduct from the early founding date that it started out the conventional way with branches. However, it closed the last 2 branches in 2020 during COVID and transitioned to an online-only model. Alliant has $20 billion in assets and a solid offering of checking and savings accounts, credit cards, and auto, personal, and home loans, although it also seems to have limited investing solutions and does not offer student loans. Alliant does give you access to 80,000 fee-free ATMs nationwide via an extensive network of partnerships, including with other credit unions. They claim it's more than Chase and Bank of America combined, and they also rebate third-party withdrawals of up to $20 per month. Now, some people like credit unions and their model of being owned by their customers, who are also their members. But this also means that you will always need to become a member before you can open an account. And for some credit unions, this can be a real hurdle if you need to show your ties to a narrowly defined community. This is not the case with Alliant, though. You can become a member by joining one of their participating organizations online and for as little as $5. Other than Alliant Credit Union, all the other online banks on our list of top 5 are immediately open to all U.S. residents, and there's no fee to join like there typically is with a credit union. So, last but not least for today's list, we have Lending Club, with headquarters in San Francisco, California. Lending Club is another name that has popped up before on our list of the top CD rates in the country. It received its bank charter in 2021, but as the name suggests, it was initially founded in 2007 as a peer-to-peer lender. With $11 billion in assets, it is the smallest institution on our list. Reflecting its roots, it is still a bit more lending focused, offering personal, auto, and other types of loans. It also has savings accounts and CDs, which can have attractive rates at times, as I just mentioned, and checking accounts that stand out with a cashback debit card. Lending Club allows unlimited worldwide ATM rebates, but has limited investing solutions and does not offer student loans or mortgages. Remember that deposits with all the banks and credit unions on our list of top 5 are insured by the FDIC, or in the case of Alliant Credit Union, the NCUA. None of these rely on a partner bank model to get their deposits insured, like Chime does. And both the FDIC and the NCUA have the same $250,000 limit and conditions and are backed by the full faith and credit of the United States. So, now that you have a solid first overview of the overall capabilities of these 5 online banks and credit unions, drop a comment below. Are you already using an online bank? And if so, which one? Is it for some products only, or have you even moved your main checking account over? And if you're not using an online bank, what would it take for you to move your main banking relationship from your more established traditional institution to one without branches? And which online bank would you seriously consider? Curious minds want to know. And for those of you who are more credit union fans, check out Ava's latest video here on your financial journey for the top 10 credit unions in the United States and see whether one of those might be better suited for you. All right, members, super savers, and course fans, I hope you enjoyed today's video and learned something new. And see you again very soon with more brand new wealth building content for your financial journey.